morning, everybody, and thank you for joining us. I'm pleased to see so many in the crowd, considering the intensity of last night's investment meetings. My name is Digby Gilmore. I'm an Executive Director in Institutional Sales with Canaccord Genuity, and on behalf of Canaccord, I'd like to welcome you all to Day 2 of Diggers and Dealers 2020. So thanks very much for joining us. To start this morning's session, I would like to introduce Tony Mccouch, the President and CEO of Kirkland Gold. Tony's a mining engineer with over 30 years' experience. Prior to joining Kirkland in 2016, he was the CEO of Lakeshore Gold, which he built from a junior explorer with less than 10 employees to a low-cost gold producer, 2 mines and 550 employees. Kirkland Lake, under Tony's leadership and a strong management team, is building value for shareholders through its portfolio of very high-grade, low-cost assets in the 2 great mining jurisdictions in the world, Canada and Australia. So please join me in welcoming Tony Mccutch, President and CEO of Kirkland Lake Gold.
Okay, thanks. Hope everybody can hear me there, and I really appreciate the opportunity to get the chance to speak to you. I know it's sort of a virtual live event, and I think it's a testament to the technical staff and that is supporting diggers and dealers that we can do this in a live format. I know I'm sitting here on the other side of the world up in not far from Waterloo, Ontario, in Canada, being able to talk to you, and it looks like it's pretty much real time from my perspective. Anyway, I really appreciate that opportunity, and really thanks to diggers and dealers, and it's a testament to keep the faith strong in terms of still holding this event in spite of all what's happened and challenges in the world over the last while. I don't know whether it's better to have it at this time of year or in August. Maybe it's a little bit too hot now down in Kalgoorlie, but it's definitely worth having. The sign says it's a premier gold event, Australia's premier gold forum or premier mining forum, but it's probably what Diggers and Dealers really has become is a premier global mining forum. So thanks for giving us the opportunity to be there. Anyway, I'll get on. Kirkland Lake Gold is a pretty exciting company, and maybe I'll just try to give you a little bit of a quick rundown on the company without boring it too much, and with being able to keep people excited. Anyway, before I do that, though, I'm going to give you the forward-looking statement. You guys can read this on your own leisure. I will probably make some forward-looking statements, and I will try to talk about a few things. And it's really kind of neat that I'm able to present this, and sort of we're using 2 formats in terms of trying to present in real time to you. Anyway, this is my slide 3, and here it shows that as in the introduction, Kirkland Lake Gold is in two of the best mining jurisdictions in the world, with operations both in Canada and Australia. We have the Fosterville Gold Mine in Victoria, in Australia, not far from Bendigo, as well as we have both the Mccouch mine in Kirkland Lake and the Detour Lake mine that's up north of Cochrane in northeastern Ontario in Canada. We also have operations or projects we're working on in terms of what's happening in the Northern Territory in Australia, and we have some other interesting things that we're working on, and driven with exploration in Canada, both in Northern Ontario. Anyway, what we do have, and we are talking about Kirkland Lake Gold, and you can see sort of the progression in a couple of slides here in terms of progression and production year over year since 2016, as well as the how we were able to lower costs. And if you go back to 2016, Kirkland Lake Gold was 3 junior. Actually, it was 4 junior gold mining companies. It was the Kirkland Lake Gold Limited. It was St. Andrews Goldfields. It was Newmarket Gold and Detour Lake gold mines. And over the previous 4 years, we've been able to put these 4 companies together to make one better company out of the 4. And the biggest part is being able to get some capital market strength and have money to be able to invest. But fundamentally, it's been driven by exploration success and as was previously said, some strong leadership and really good management at the operations, both in Canada and Australia. Fosterville back in 2016 mining was targeted that year to be 135,000 ounces of production. Grades, reserves were sitting around 240,000 ounces, and grades were sitting around 7 grams. Since then, the mine has been transformed from and has produced almost 2 million ounces of gold since then, or will be by the end of this year. Still with well over 1.5–2 million ounces of reserves, and one of the lowest cost mines in the world. And a big part of that is the aggressive exploration drilling and significant exploration success. We've had similar transformational opportunity we see at Mccouch, both with exploration, where we've been able to grow reserves from 1 million ounces back in 2016, and production of just over 155,000 ounces, where we're now the mine can produce with 240 to 250,000 ounces, and production can grow to over 400,000 ounces a year by 2023. And that's with both combination drilling, but also development. We've got to develop a new shaft to get new access to the mine. And then we really are pretty excited about Detour Lake and how we feel this is transformational as well. And I'll give you some color on that as we go through the slides. I think a couple of things that are probably important, and especially in these times, where I talk about to people, and I know there's challenges with COVID-19 and challenges throughout the world, and it's not just challenges in terms of the disease, but what it's done, the economic impact's been, what it's been to people, etc. And as gold mining, we might have a lot of complaints, and we've all been affected by it. But as gold miners, we got nothing to complain about. The price of gold is at record levels, and profitability is high, and we have to really maintain our focus, add to our focus in terms of supporting our people, supporting our communities, and supporting the regions of where we work. And we've been fundamentally focused on that, and really trying to get better at it. And I think the industry as a whole has done a great job of that. But we also focus on conduct and how we treat our people, and how we treat the environment as we go forward. I think it's a key part of what Kirkland Lake Gold is about as we go forward. But if I go to slide here, and I talk about some of the economics aspect of our business, and you can see Kirkland Lake Gold, we've if I look at where we are in terms of earnings, etc., we've had strong operating performance and financial results over the last few years. You see the growth in net earnings in 2019 to 267 per share. It grew, but also free cash flow growth to $463 million, and this is free cash flow after tax, etc. And then if we go to this next slide, and you're looking at 2020, we've kept the momentum going. And as you say, we've had a strong growth in both earnings and free cash flow. A lot of it is really, I've said before, it's always good to have high gold prices and high grade, and Kirkland Lake Gold has a lot of both. And that sometimes makes us smart, but we also, we have to keep our feet on the ground. But if you can see the financial performance of Kirkland Lake Gold, you see the free cash flow was $285 million, including any transaction costs related to Detour Gold in the first half of the year, and that's not including $132 million of tax payments we made in the first half of the year, and if you look at what we've done, even from an earnings pace basis, you see that our earnings have been very strong as well. So maybe I'll just go to this slide. This is, when we talk about the free cash flow growth, you can see that, coming into now September 30th, we have almost $850 million currently on the balance sheet now. And, I think one thing that does set us apart, Kirkland Lake Gold, we have no debt. And on top of us growing our cash balance this year from $500 million at the beginning of the year to over $850 million currently, we also have used $527 million this year alone, repurchasing shares as of October 12th. And, in terms of by adding Detour Gold, we repaid Detour's debt on the balance sheet. We've closed all the hedge positions, and we spent over $60 million in transaction, or $50 million, in transaction costs. Turning to slide 8, you can see see that we've, a big focus is in terms of returning capital to shareholders. So far, we have returned, as we talked about, with our share purchases and with our dividend, over $650 million US to shareholders. 527 million of that, as I said previously, was in share repurchases this year. We have we stated a goal that between 12 and 24 months from February 1st of this year, that we would buy up to 20 million shares. So we're just over 12 million shares currently. So we're well on our way to meeting that guideline, or that target we gave for ourselves. But we also increased our dividend. We doubled our dividend back for Q2 of this year, and then we just announced now another 50% increase in our dividend to 18.75 cents per share, or 75 cents per share on an annual basis, but for Kirkland Lake shareholders. Turning to maybe I'll just talk a little bit about Fosterville. And as I mentioned, Fosterville was a transformational story. And we talk about what the growth been in production, and you can see the growth in production and the lower costs, and fundamentally a lot of it's been driven by grade, but it's been a lot of hard work by the people at Fosterville. They've spent put a lot of effort and time and their own intellectual property and their own heart into both discovering these deposits and then working out ways to safely and effectively mine them at a very profitable place, and turn Fosterville into one of the premier gold mines in the world. The biggest thing that's happened, say, in Kirkland Lake Gold, and the big question in 2020 is, what's happening with the Swan Zone, with the Eagle Zone, which drove a lot of the growth in production in 17 and 18, and coming into 17 and 18, and then 19 and 20 has really been the Swan story. And what we see going forward, we continue to explore the Swan Zone, and I'll give you some color in terms of what things are looking like around there. But we still see lots of upside at Fosterville, lots of place to explore, and there's a big gold system here. This just here is a 3D view. A surface view of Fosterville, and as you can see, the main. Maybe the main comment is first off is that the mine itself follows this line of this fault line. You can see some historic open pits. You go to underground at Fosterville, and you can see the main part of both the lower Phoenix zone and you see the zone that hosted Swan sitting down in here. And what we've been able to do is definitely we've identified the Swan Zone, and you get a sense in here. You can see where Swan is and where some of the current mining is tied to it. But we've also we've extended this zone significantly down plunge, almost a kilometer at Fosterville. On top of that, you see over in the foreground here, you see a whole new system forming up here, which is Robbins Hill, which we're currently completing some access development to from surface out towards Robbins Hill, both to help to explore and develop Robbins Hill, but also, if you look closely on the surface, you can see that this whole trend of open pits continues to the north, and it's going to really help us in terms of exploration as we move forward in that direction. And again, this is just showing you what the reserves looks like on the Swan Zone, etc., and Harrier, and looked at some of the recent drill results that we've put together for Fosterville, and we've had some pretty good success. I mean, the grades seem to be coming in lower as we're progressing, but that's only because we've somewhat defined the limit of the high grade part of the Swan Zone, and now we're working towards finding the next high grade portion of the Swan Zone, if you want to put that perspective. Now, if I go a couple of kilometers away, which at Robbins Hill, we've already seen that Robbins Hill is another large mineralized system here at Fosterville. We've intersected quartz with visible gold in the system. That no different than what was originally identified at Lower Phoenix at Fosterville, and at the Lower Phoenix portion of the mine. in the early days. And you get, you get a sense from this drawing here that, there's definitely a strong plunge to the mineralization. And, we've got a lot of work to do to figure it out, but I think things are progressing fairly well. And, you're looking at this view, you get a sense on the types of grades we're finding over at Robbins Hill and in the early part of mining. And they're equal to, or comparable to, equal to, or even slightly better than what was originally at Fosterville in the same elevations. One thing, just before moving on here, move out of what's going on in Fosterville, because there's a lot of exploration story. We do have, I did give you an indication of the Northern Territory. We actually are carrying out an extensive rehabilitation program, a project here, or as per my conversation with Jaja Warrung recently, I think what we talked about is we're healing the earth. We're looking at, doing a little bit of work to clean up some of the old pits and the remnants of the old pits that were left here. Excuse me, at the Northern Territory. It's approximately an 80 million Australian program over the next 3 years, and really to really deal with the problem here. Pretty much make it almost a somewhat in the long term a walkaway closure in here. Maybe I'll just go quickly over to Macassa, and just give you a sense of what's happening here. Again, this is now I've gone to Canada. Macassa is an underground gold mine. Mining right now are at depth somewhere around 5,800 feet, or let's just say the mining is somewhere between 1.8 and 2 kilometers below surface currently. It's a high-grade underground mine, and it's mining over 5 million ounces been mined at Macassa, and it's been mining here since 1933. We currently have about 2.4 million ounces of reserves at 22 grams per ton. We're having significant exploration success at Macassa. I can give you some color of what's happening there, but I think when we talk about transformation at Fosterville through exploration success, and it was a ramp mine, and then the ability to develop and then I'll talk to you a little bit about what transformed at Detour, but what we transformed Macassa mine, as I mentioned to you, through new development, through new access development with a new shaft. We are developing a new ramp starting at surface. The ramp's going to take a few years to get there. It is exploring or developing into some new mineralization identified near surface. But we see Macassa growing from the current levels, as I mentioned, but 200 to 240,000 ounces a year to over 400,000 ounces a year by 2023. And that's really with this new number 4 shaft, which fundamentally provides new access, but also increases the productivity of the mine, and the ventilation in the mine improves working conditions. Anyway, this is I'll just take back now. I'll just do a quick surface view of Macassa. And I think before I get into too much, you can see where the number 4 shaft is. This is the number 3 shaft, and from a scale point of view, from here to here, that's about 1.5 kilometers. The distance, again, the mining is all at depth. The main thing about Kirkland Lake is we have what is called the main break, sitting a main break or 04 break here. We've identified the amalgamated break sitting over to the south. So this is south, that's north. We've got the amalgamated break. This is the 04 or the main break, right? Sitting here to the south, and the South Mine Complex was identified here. So the initial years of mining at Macassa or in Kirkland Lake was over 20 million ounces mined along the main break 04 break. The South Mine Complex, new discovery, really, just in the 90s. This is all, I'm sorry, not in the 90s, in the 2004 to 2008, when this was all discovered, and this is where we're mining currently. And now, as we're going deeper, we're finding that the amalgamated is really going to be, I'd say, significant, or it definitely has exploration upside. So now, just going underground, I try to give you some sense of what it looks like from underground, and I showed you again what it looked like on surface. And again, if I were to come in here, this is the 04, the main break. You can see the historic mining. This is the South Mine Complex. It's a splay fault. And this here is the amalgamated break. And I mentioned to you about some near-surface ramp that we're developing, near-surface mineralization. We've also given some color in terms of exploration success as we're seeing what's happening with mineralization coming into the amalgamated break at depth, and the mineralization is still open on a number of areas along the main break. So let's go to this slide. This is just looking sort of a long section looking into Macassa. Again, if you look at some of our exploration success, and the upside, we recognize that, this is still open at depth, both on the 04 break and on the South Mine complex. And then as in this view, the amalgamated break is coming in. And then as if I were to go to the west a bit here, to the east a bit here, I should say, we have had exploration success in this area here with the new drilling, which is demonstrating that the 04 break continues to be mineralized in these areas. This is giving you some sense of the types of grades we're getting there. 27 grams over 2.1 meters, 19 grams over 2 meters. That's in the South Mine complex. You can see the space of the intercepts, and if you again, if you want to look at this, where these intercepts are in relation to each other and to different zones, maybe I can't really show it there. I'm just going to confuse you, so I probably should leave it out. I'll just finish it with telling you there's a lot of exploration upside at Macassa, and with the new shaft and new development, just what we see, definitely a lot of value creation can be happening there. Then I'll just move over to Detour Lake. We think Detour is definitely one of the, an exciting project for us. It is one of the largest open pit mines in the world. It's scheduled to produce at a rate of about 600,000 ounces a year. Excuse me. This year we expect to be able to grow that production in the next few years, fairly well. What we see here, it does have currently a large reserve base of over, close to 15 million ounces in the reserves, but there's a significant mineral inventory at Detour and significant exploration upside at Detour. And where we see is the ability to grow production and with growing production and look at developing and lowering unit costs here, we believe that there's significant upside that we can create for shareholders at Detour. And just give you a quick link here. This is just a plan view of Detour, just so you can get a sense. And the Detour make line sits here along this main deformation zone that goes way out into Quebec. And if you follow Wallbridge or a few other projects that are in the Quebec border, they're over here. And you see this is a typical basin in here. And you can see we have another target, 58 North, I'll talk a little bit about. But if I just go to see with Detour, this is the Detour main pit. Give the screen a little bit of time to catch up, because you see this is the Detour main pit. You can see some of the original underground workings are tied in here. So this is the main Detour pit. This is what's called the west pit over here. This is the west pit, and this is called the north pit, and this is the main pit at Detour, right? So now if I go to this slide is showing you in the yellow is sort of what we targeted when we picked it up. We said, this was mineral inventory. This was mineralized system that had been identified at Detour over the years, but never really been drilled and followed up upon. And you get a sense with the, where it sits within the ferry pits. This was always considered here, this area here, the saddle zone. Sorry about that. This is the saddle zone sitting in here. It was always talked about with that Detour. And in the west pit, you can see where it was. But now you see with, this was a mineral inventory that we had identified from past drilling that never really been cataloged, characterized. And, just to give you some follow-up that we've done in just recently now since we acquired Detour. This is all new drilling, and you can see every hole drilling through here is not only confirming the mineralization that's here, but also they've been demonstrating some improvements in grades. You got 1.4 grams over 120 meters, 1.25 grams over 65 meters. So, fundamentally, what it really shows is the potential that Detour, not only could be the blue outline pit here that's shown here, right, which could then encapsulate a much larger mineral reserve, but also, you get a sense of what the potential is here over time as we explore at Detour. And then, similarly, we just put out something. I talked to you a little bit about 58 North. This is just there's another project that came here. We've done some drilling, followed up. There's about a 500,000 ounce resource identified here. And, we've done some follow-up drilling, and again, you can get a sense as you're following the structure, lots of pretty good grades, good continuity in grades. And, it's a geology story. Again, you got to get a sense on, how the deformation zones work, where the splay faults are coming off these main deformation zones. But you can get a sense that there's a lot of upside potential here at 58 North, similar to what's at Detour. Sorry about that, moving the slides around too much. Anyway, I should probably try to just summarize or end the presentation. I don't want to talk too much. I know people might have a lot of other things more interesting than listening to me. Anyway, I'll just summarize here and say, in terms of Kirkland Lake Gold, and, we've definitely had some superior performance over the last few years. It's been by taking assets and turning them into high quality assets over the years. We've been highly profitable, focused on exploration and operation performance, et cetera, to not only lower costs, grow production, and then create, improved profitability, improved cash flow. We've as we talk about, leading earnings and cash flow performance of the company by industry leading in terms of financial strength. Again, we have no debt whatsoever on the balance sheet, a very, very clean balance sheet on the company, no real encumbrances whatsoever. And I say 850 million in cash up to now. And significant cash flow generation expected this year, next year, and the year after. We have projects that are advancing that we fully finance. We don't have to go to the market to try to raise capital and dilute shareholders. And I think fundamentally one of the key parts in terms of being a gold miner, we have to focus on being a good explorer and understand the geology, and we've been focused on geology. And then the last part and the most important part is the company belongs to the shareholders. We're shareholders too, and we commit to returning capital to our shareholders, and that's how we think we deliver superior performance. So with that, I'll be happy to end the presentation and take any questions if there are any questions. Thanks very much for listening.
Thanks very much. Are there any questions for Tony on the floor? I'll just ask one quick question then, Tony. So with 850 million cash, no debt, how would you prioritise growth versus capital management going forward? Thanks.
Well, I mean, I think we've got to really define what growth is. Growth isn't just growing in ounces of production. Growth should also be growth in earnings and profitability. And so I think from our perspective, we can focus on that. We have the ability to look at projects and look at it from a different perspective. Both the project we have internally, we can take long-term assets and turn them into shorter-term assets by investing with the capital we have. So we have that ability in terms of growing the company that way. And I think we have that unique financial strength that that we can look at other projects. And it's not like we think that we're smarter than the people who ran Newmarket Gold, or smarter than the people who ran Detour prior to us, or fundamentally even smarter than the people originally running Kirkland Lake Gold. It's that we have the financial strength, so we can make decisions based on what we see technically at the asset, and we don't have to. No offense to the investment bankers here, but we don't have to go to the investment industry to look for ways to move forward.
Okay, thanks very much, Tony. Please join me in thanking Tony for his presentation this morning.
Yeah, thanks everybody. Okay.